What drives customer decisions before they even visit your website? Welcome to This Explainer. I want you to think about your own search habits for just a second. When you're looking for a service, a product, or even a new business partner, what's the very first thing you evaluate when those search results pop up? Before you click a link, before you even read an About Us page, you're already making a purchasing decision, aren't you? And it's based on just a few tiny gold stars and a handful of comments. As business owners and executives, understanding this dynamic is no longer optional. It is literally the front line of your commercial success. Today, we're unpacking a really fascinating, structured approach to commercial search visibility. We're looking specifically at how a framework provided by a service called Clear My Name helps companies build stronger, much more resilient Google review profiles. We're going to look closely at why reviews matter so much for trust and local search rankings, the common pitfalls that businesses face, and most importantly, how to systematically turn your public reputation into a powerful revenue-generating asset. Okay, let's dive into this. Our strategic roadmap covers 5 key areas today. First, the power of search perception. Second, the hidden risks of review neglect. Third, the Clear My Name framework. Fourth, measuring your review ROI. And finally, a continuous growth strategy. Section 1, the power of search perception, shaping decisions before the click. So we actually have to start by completely reframing how we think about the sales funnel. Traditionally, you might think the funnel starts when a user finally lands on your website. But actually, there's a massive influence layer that exists way before that first click ever happens. We call this the search perception influence layer. Prospective customers are out there evaluating your ratings, the quality of your reviews, how you respond to feedback, and your overall sentiment, all directly from the Google search results. But here's the kicker. It's not just humans making these judgments. Search engines themselves use review activity, sentiment patterns, and review frequency as vital reputation signals to evaluate your local search relevance. Basically, if your ecosystem is strong, Google sees you as a highly credible, relevant result to serve up to its users. This brilliantly illustrates the huge gap between a proactive business and a reactive one. A structured review strategy produces measurable improvements in visibility, trust, and ultimately customer acquisition. It's a total game changer. Conversely, inconsistent generation just leaves your reputation entirely up to chance. It creates these massive visibility gaps and completely weakens the very trust indicators that search algorithms rely on to rank your business. I mean, you could literally have the best service in the world, but if your review generation is inconsistent, the algorithm simply doesn't have the proof it needs to confidently rank you above your competitors. Section 2. Hidden risks of review neglect. The cost of inaction. Ignoring this ecosystem carries a really significant financial risk. It's not just a marketing problem, it's a fundamental business liability. So the crucial point is that the greatest commercial risks stem from a few key failures. We're talking inconsistent review generation, unmanaged negative feedback, declining overall ratings, weak customer engagement, and low review volume. Now that last one, low review volume, is super tricky. You might have a perfect 5-star rating, sure, but if you only have 3 reviews and a competitor has 300, you lack competitive strength in the local search environment. Search engines need sufficient evidence of quality. It's not just about a raw number of empty star ratings. A high volume of recent, detailed, high-quality feedback is what actually moves the needle. But let's zero in on that second risk for a second, unmanaged negative feedback. There's a really powerful observation here. Search users interpret silence as a lack of accountability, which damages entity credibility and weakens confidence in the business. That is absolutely crucial. Think about it. When you get a negative review and you just ignore it, you aren't just ignoring one angry customer. No, you are publicly broadcasting to thousands of search users that you do not care. Poor response management actively loses you conversions because you're completely missing a prime opportunity to demonstrate your professionalism publicly. Let's put this into a real-world scenario. Imagine your business's profile sitting right next to a competitor's on a search results page. Your weak profile means lost conversions, reduced entity credibility, and poor local visibility. Meanwhile, your competitor is maintaining a rock-solid ecosystem. They're winning on rating quantity, they have recent reviews, and their response quality is top-notch. Search users compare these exact metrics side by side every single day. The harsh reality, a weaker profile will absolutely lose market share, even if your actual physical product or in-person service is vastly superior to theirs. It's tough, but it's true. Section 3. The Clear My Name framework. A structured reputation solution. So how do we actually fix this? This is where we transition from diagnosing the problem to exploring a solution that builds a robust defense and offense for your brand. The Clear My Name methodology follows a very distinct process. Let's move to and see how this builds. Step 1, they audit review profiles to identify visibility gaps and trust weaknesses. Step 2, they implement acquisition systems that encourage genuine customer feedback, creating that ongoing evidence of satisfaction. Step 3, they monitor sentiment patterns, which is vital for catching recurring customer concerns early. And Step 4, they execute professional response management. This structured approach generates authentic review growth while constantly reinforcing those positive search perception signals we've been talking about. You can kind of think of a healthy, perfectly managed review ecosystem as having 3 equally important components working in total harmony. First, you've got the acquisition of authentic reviews. Second, the rapid identification of sentiment issues, basically catching a problem before it blows up into a public relations crisis. And third, the execution of professional responses. When all 3 of these things are working together seamlessly, you are demonstrating real operational transparency. You're showing both the search engines and your potential customers that you are an active, engaged, and highly trustworthy business. Section 4, Measuring Your Review ROI. Transforming reputation into a measurable business function. If we're going to invest our time and resources into this framework, we really need to know it's working, right? We need to transform reputation from just a vague marketing concept into a measurable, data-driven business function. Now, what's really interesting about this slide is how we can map performance metrics directly to tangible executive goals. For example, if our review KPI is review volume growth, the direct business outcome is strengthened local search visibility, because remember, more reviews equal more signals for the algorithm. If we track sentiment trends, the outcome is perception risk reduction. We're literally fixing operational issues before they cost us money. And when we measure response management, the outcome is improved conversion performance and trust. This completely takes reputation management from being a reactive chore and turns it into a highly proactive, measurable asset. The measurable outcomes of this kind of investment are just profound. We see increased review volume via structured collection, much improved rating consistency, and totally stabilized reputation signals. We also see strengthened entity credibility through constant positive customer validation. But honestly, perhaps the most important point here is that this creates cumulative value generation over time. Every single positive review you acquire today contributes reputation signals that support your trust and visibility tomorrow, next week, and next year. It compounds. Section 5. A continuous growth strategy. Long-term reputation stability. Because this value compounds so beautifully, we have to fundamentally change our timeline. You just cannot treat reviews as a quick marketing sprint. If you run isolated review campaigns, say pushing really hard for reviews for 1 month and then ignoring them for the next 11, you're going to get unstable performance and completely sporadic visibility. That's just a fact. On the flip side, systematic reputation management maintains strong visibility, trust consistency, and that amazing compounding search influence we just talked about. Unlike a short-term promotional ad spend that just stops working the very second you turn off the funding, a well-managed review profile remains visible throughout the entire customer journey, significantly reducing your reputation-related costs over the long term. The source material leaves us with a pretty stark reminder here. Sustainability becomes particularly important as local search competition increases. Look, your competitors are not standing still. The digital landscape is getting more and more crowded every single day. The businesses that maintain a positive, systematically managed review ecosystem, they are laying down digital trust foundations that will simply outlast those who rely on sporadic, unmanaged activity. Review management is a continuous strategy. It is definitely not a one-time activity. It's the highly visible, trusted, and continuously updated indicator of your entire customer experience. So I want to leave you with a provocative question to really reflect on regarding your own commercial risk. Are you actively controlling your search perception? Or is it currently controlling you? Please don't leave your reputation up to chance. You can start building your entity credibility today by visiting www.clearmyname.org. Thanks so much for joining me for this explainer, and I'll catch you next time.